Good morning, guys. Welcome to this Tuesday, November 11th. It's Veterans Day. Happy Veterans Day. And most of the institutions are closed, I believe. Futures are open. Stock market is probably going to be closed, I guess. I'm having to, yeah, well, we'll see if the stock market is going to close. Pre-market is open, so stocks are moving. But it's a federal holiday, Veterans Day. So overnight, yesterday's rally was pretty much spectacular. Uh, nice little government reopening rally, and now we'll see if we can hold on to the gains here going into today's trading. Yesterday was one of those risk-on kind of a days. We'll see if the key thing is really, can they hold it today, or are we going to see a little bit of a breather as they consolidate the gains. But we are pretty much we are well above this area now, the 6,800. We are holding above it. We are technically reverse retesting or kind of holding here in that 6830 to 50 area. And as long as they can hold here at the 6830s, I think the level is going to be the 36s here. That's kind of the support area now in the overnight. So if they can hold this area, I think we may be in good shape to stay up here, maybe even make a go at the highs. If not, we may see the market retrace back down here into this lower range. Still had to get past this 6,800 edge, little volume edge right there. So if they can get past that one, then we'll be back in that lower range again. So a bit of volatility, but given where we were going, straight down here, I think we retraced it pretty hard. Pretty much, we had an elevator down, kind of a move for a bit there. Now we had an elevator up, and it's kind of unusual. You get these big retracements on the upside. More often, you get these little grinding moves to the upside, and then one big elevator down. But the retracement here from the ruin that the government is reopening has been pretty good. So I'm going to start off range bound with a bias to the upside. As long as I hold this 68.35 level, I'm going to be leaning towards the long side of the market. And looking to buy against that 35 level. If they back off, buying against that 68.20 and the 6800 would be the next levels down. Just not as aggressively. If they take out that 6805, 6800 level, then we are back in that lower range again. And this little rally is kind of reversed on us. So that's kind of where we are. Modestly optimistic that we may see some strength. I mean, the overnight has, since the close, has just been kind of a little bit little bit weak, I had to say. It keeps backing off in a slow-mo fashion. But we'll see. Supports 35 so far holding. So when the day session kicks in, we're going to get them to try to run this lower and test the 6820 or 6800. If they take out that 6835 as early strength, I would look for a potential short right there and see if they can run it all the way down here to that 6820s. So that would be the only really short I would initially look for. If they're done at the 6820s, I would look to buy against that one, and at 6805, looking to buy against that one. But I think if you're going to get on a short side, you kind of had to get in early on that one. Chasing it on the way down here, you just never know when they're going to stop, and just finding yourself closer and closer to that potential reversal point or stall point. But then, so that's kind of the way I'm looking at it. Looking to buy against that 35 level. If they take it out, I'll consider a short for rotation down here to the 6820s. And on the way up, looking for short setups against the 50s, the 55s, the 65s for rotations and back down. But this is, I would say that above the 55s, well, I had to kind of include 65 now because they were pretty much back up here and bouncing on it. So we kind of have that level to lean against. But looking for shorts against these three levels. And if they can take out the 65s, I think they're solidly heading up to that 85 attractor, maybe higher. But I would not be super aggressive on these short, but they will still look for short setups against them. So the 6850s, 6855s, 6865s. So we're looking for continuation from yesterday and see if they can take this higher. If not, we may see a potential retracement trade. If they can't hold on to the 20s or the 6800s, we may find ourselves right back in that low range again. Don't quite see it. I mean, unless we get a hiccup on this government reopening, there's something hiccups up in the process or something like that. That's kind of what I think would come in. But with the earnings season behind us almost and a lot of good earnings, I think they have I mean, pretty much tailwinds going into the end of the year. So, and we passed in the September or the August, September, October timeframe without any major pullbacks. A little bit of volatility, but nothing by any means as crazy as it can be. So that's where we get started on the ES. So starting off range bounds, slight bias to the upside. Let's see if they can hold on to the 68.35 level. On the bond market and the Nasdaq, it is Veterans Day. Bond market is pretty much dead. These guys didn't come into work, that's for sure. So nothing's happening on the bond market. Just the trade as a range bond market. On the Nasdaq, we are pretty much in the same spot, backed off a little bit in the overnight. We'll see if they can hold this volume edge here at the 560. It's at 519, 560, and if they can hold these two support areas, I think we have a shot at potentially holding on to our gains, maybe head back up again. If not, Nasdaq has been the one which is has most of the volatility. A lot of that AI trade is it's being churned, if you wish. But overall, that trade is going to be a pretty solid one. So it's just the volatility, and a lot of these companies are kind of pre-earnings, so they pre-major earnings, I should say. So it's a lot of expectation games. Creates a lot of volatility, but definitely potential for movement there. So on the Nasdaq, a pretty good move, reversal to the upside on this guy, and we are kind of had to get a little bit high. We had to get up by about that 870, 880 before I start really getting excited about the long side. So a little bit more in the twilight zone. I'm going to still start from the long side and watch this midpoint here, the 510 to 550s, 560s. A little high volume area right there. That volume edge, the one I was talking about here earlier. If that comes out, we're probably going to be heading back down here into this lower range. So we may see this range being tested. As long as they can hold the 350s, that would be the lower edge. If that comes out, we are back in that lower range again. But right now, we're kind of building or running or testing this area, right? This used to be this big low volume area. Now they have building value. Had to get up above that 25, 800, 850s for me to get excited about the long side again. And look at that, we're right back up to the highs again. So we have a good shot at taking this higher. May not be in a straight line, and given the nice rally we had yesterday, we'll see if they can hold on to these gains here. So we're going to buy against the 590s and the 560s for rotations up. They're going to get short against the 640, 645s, 680s, up to the 760s for rotations back down. A little bit less aggressive on the short side since I'm starting off with a slight bias to the upside here. So that's kind of how we get started. If they take out that 550 edge, still looking to buy against these 500s, 450s, 400s down to that 360 level. But these levels, I would be a little bit less aggressive at that point. Maybe even try a short trade below that 560 for see how far they can take it. So we'll see how that goes. But as you see, I mean, when you get early weakness, sometimes you get it right from the get-go. Sometimes you get one little strength, little pop to the upside, and then you get early weakness. And it usually runs into that London close. So we have a pretty solid pattern. We see it more often. It's always like which half hours it's going to be going on, where it's going to stall, right? So, but it's the overall shape of the day when the market is trying to take it higher. It's a little bit of strength, some weakness mid-morning, and then strength towards the afternoon. We'll see if the pattern holds for today or not. That's going to be the thing to look for if it's starting to change from more of a risk-off pattern to more of a risk-on one. So that's the Nasdaq to get started. And then finally, oil and gold. And you'll see my messy screen. Not too much stuff going on it. But here you have gold. They are back up, taking this a little bit higher. They're right in this high volume area. The 4130s took it a little bit higher, but not up to the 4150s, but haven't really blown out anything on the upside. And you can see here capital flow on gold. We ran right into this attractor area. We're now up here. So you have this whole volume edge. Watch this upper area, the 4160 to 70. If this area comes out, that's when you have a pretty good move to the upside. And that's when I think you can see this take off to the upside again. But this whole move, the big move out of the middle to the downside, has been reversed. Right now, we have it right the opposite. Big move out of the middle from 4,000 straight up to 4,030. 4130, and then now we're probing a bit to the upside. But this whole range is an area to pay attention to. It's still in the range, right? But I would start off from the long side on gold, looking to buy against the 35s, the 20s, maybe down to the 4108s for rotations up. A little bit more aggressive switch at 4120 if you want to get short. To look for a short setups below that one. But they kind of had to get below that 4100s, I think, before we really start thinking, okay, they're retracing back down again. It looks to me like gold is trying to take this higher. That's gold. And then finally oil, back up to the 61, 60.50. So kind of holding on to the range. You can see that's kind of drifting back and forth in this range. And if you look for a capital flow on that on oil, my oil, there it is. You can see it. He's not doing much. He's just building value. A little bit lower, a little bit below that upper level. So they kind of if I fold this together, you can see this whole distribution starting to become like kind of coming together into one big distribution, coming to balance around about 60 so right now. So we'll see how that's going to go, but oil is going to be one of these grinds to the downside, and I think we'll see how far they can take it or how far we're going to get. But so far we've been 10 months into new policy, so things doesn't shift that quickly, but you can see how policy definitely changes the dynamic here, and for the better. It means that we're going to get good lower oil prices and lower gas prices, right? So, oops, let me do that. So there you have it on oil. So range bound oil, look to sell strength 60, 50, 60, 75 up to 61. Look to buy weakness 60, 20, 59, 80, 59, 50s down to the 59, 20s for rotations up. So same range as before. Nothing much has changed. I have not traded oil for a bit. It's kind of been pretty doldrummy. Now, both oil and gold, if you notice, gold's commission rate went up. It's starting to charge more for commission, so that's kind of stupid. And oil, same thing there. It's a little bit higher. So you pay more to trade those markets than anything else. So that, in addition to them not moving as well, that's kind of stay away from it for a bit. Gold definitely tradable. So I mean, I'll take that trade if I see a good opportunity, because they move like that. That's fine. But overall, I noticed that they both those commission rates are high right now. Kind of sucks. Anyway, so start with slight bias to the upside on gold, range bound oil. Watch for the ES and Nasdaq. Let's see if we can get a move. What kind of move we're gonna get to the what kind of move we're going to get to the upside, or if they're going to start retracing this. All right. Now, I just noticed the bond market popped. Kind of an interesting dynamic. A big pop on the bond market. We'll see what that was all about. But we'll leave it there, guys. So good trading. And I will see you back at 11:30 for the next update. But now it is Veterans Day, so I'm going to take it a little bit easier today and watch the market a little bit more carefully, see what kind of dynamic we're getting. Because some of the players may not be in the market right now. All right, guys. Good trading, guys. And we'll see you back at 11:30.
Later.